What's going on, guys? Welcome to another video here. I'm actually here in this one. Not that I'm not that I'm not here. It's just like I'm actually here like in the video. Somebody told me I should try it out and see how it goes. So, it doesn't hurt. So let's try it out. So anyways, let's just jump right into this video here. What I'm going to be doing is I'm going to be going over a trade in which I made $2,000 using less than like $3,500 here. So I traded Baba here. Let's jump right into it. Normally I keep this thing closed, like crushed or minimized, I don't know what you would call it, like to the side, to kind of allow for more screen space, because whenever I'm like using the charts, I'm doing everything here on like my little MacBook. You don't need a million screens and all those like special computers to do it. So, I just keep it crushed to make space, but since I'm here now taking up all the space, I guess I'll expand it. So, Baba is what we were trading today. It was a $2,000 profit, and it was puts. So puts means you make money when the stock goes down. So let's just jump right into like the whole breakdown of it here. I got into 20 contracts at 6:38 a.m. So 174 is what each one of them cost. You guys know how options work. One is equivalent to 100. So if it shows 174, it's 174. So I had 20 of them. So 174 times 20, it's like 3,480 if I'm not mistaken. Let me hold on. Let me just calculate it here. Hold on. 174 times 20 is 3,480. Yes. So the trade cost less than 3,500. So you would have been able to do this yourself with less than 3,500. So if you had 3,500 in your account, you had 3,500 to trade with, you could have done this. You could still do this with less money. I'm just, saying. So that's pretty much that. So I got into the trade, 20 contracts at 6:38, which is right here. Let me see if I can get a better zoom. You know what? Let me actually just put it on one chart. How about that? We'll see if that works. That's not looking too bad. Okay. So there we go. That might look a little bit better. So I got in 6:38, which is right here. I got puts. Puts means you make money when the stock goes down. So as the value of the stock decreased, the value of our put increased. So we got the put right here for 174. And I was even throwing this out in the chat room and everything. I was saying, hey, keep an eye on this area here on the blah, 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 so on and so forth. So if you guys, ever interested in joining the chat room and you want to be there with me in the market, it's not just for me. It's like a whole community. I'm not trying to make it based on me only. I'm actually going to be making some changes to it soon as well. All for the better, though. But anyways, that's besides the fact. That's not what this video is all about. So I got into the trade here, 6:38. Took the profit. If you guys can see here, it was two different orders, one at 9:20 and one at 9:21. My whole plan for this trade was to take my profit at 151. That was basically where I expected the stock to go, where I wanted to get out of the trade at and take my profit at. And I was expecting to hold this either throughout the day or even possibly was even like debating on like, I'll make it even a swing trade. That's what I was thinking at the very beginning. But I was thinking I probably don't need to hold it overnight to get to that point that I wanted to get to my profit target. I didn't really need to make it a swing trade, but I was willing and okay to do so as long as it obviously stick to my plan. I have a plan on when to get in, when to get out. I have alerts set on it. I had an alert set of, all right, if it goes above this certain area, I'm going to get out and take my loss. Thankfully, it never went above that area. I had an alert set on, all right, when it comes down to this 151 area, take your profit. So, it basically will ding my phone anytime the alert goes off. You can set it real simply here. It's not that hard. That way you don't have to sit here watching the chart the whole time. You just have a plan. You can say, I'll get into the stock at $100. I'll buy the stock at $100. If it goes down to 98, I'll get out and take a small loss. If it goes up to 110, I'll take a profit. And you just set the alerts. You get in the stock at 100, and you go on, you do whatever you want with your life. And then all of a sudden, if it goes down to 98, ding, 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 turns up, causes a ruckus on your phone, and then you look at it, oh man, I got to go take my loss. You stay disciplined, you take your loss. Or, maybe it goes up to that 110 area that you wanted to. Ding, 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 ding. It causes a ruckus one more time. It says, hey, go take your profit. And that's usually how it goes. So I got a ding, 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 ding here. But it was for a profit. But anyways, that's besides the fact. So I was willing to hold it even to like the end of the day. I got a little greedy again. I'm not going to lie. I went and so I closed out the first 10 contracts. Took half of my profit here. And I sold it at 277. So about $1,000 difference right there, pretty much. I got into 10 of them. Well, I got 20 of them, but let's just break it down for like 10 by 10. So I got into 10 for 174, sold the other 10 at 277. So it was about $1,000 profit right there. And then obviously I sold the rest of them like 2 minutes later at 279. So not that big of a difference, about another 1,000 there. And that's how you basically get the $2,000 profit. But I took the profit because I'm like, okay, cool, that was my profit target. We hit the 151. Let me take my profit. Let me get disciplined, do what I got to do. And that was, let me just zoom in more here now. 920, that was like right around this area that I said, all right, we're at the 151. Let me take my profit here, but I felt like it might go a little lower. I felt like it might go below the 151, so I got greedy. I don't know if it was great. Okay, again, it wasn't getting greedy because I can, based on the way you manage your risk and you plan your trades, you can lower your stops and things like that. So if I, for example, let's just say I had a stop at, a random number. Let's just not even play with this trade here. Let's just, use easy numbers. I got into a stock at $100, right? And I said, I think it's going to go to 110. So I'm going to take my profit at 110. Or if it'll go down to 98, I'll take my loss. So your stop is 98. If the stock goes up to, let's say, 105, you can take half your profit at 105 and now say, all right, I'm raising my stop. My stop is now 100. So now if the stock goes down to 100, I'm going to get out of the trade. I'm going to close out that half that I have left. But it's okay because I closed out half of it from 100 to 105. So I took a profit there. Then if the rest came back to 100, that's where I got in at. So it's okay. It doesn't really matter. You get what I'm saying? Or you could, you can manipulate it however you want. The stock could have gone to 110 even, and you could have taken your half of your profits. Then you could have raised your stop to, 105 and said, okay, now if it goes below 105, I'll close out the rest of the half. That way, if it does go down to 105, you're still making money because you got in at $100. So, hopefully you guys are able to see, like, the idea that I'm trying to break down here. So, anyways, that's where I closed out half of it because that's where I was supposed to go. It hit my profit target, 151. What am I going to, I'm not going to get too greedy. I always tell my students, if you're going to get greedy, you at least do it by taking some of your profits. So I got a little greedy, but at least I took some of my profits. So that was basically that. Then at 921, that's where I closed out the rest because that's then where one of my strategies came into play. And I'm like, oh, well, we got a little bit of a reversal coming in here. So just close it out. And that was basically that. So that 921 was pretty much right down here. That just looks really ugly like this. You can't really even see anything going on. It was basically right here at the bottom, 921. So technically I called the bottom. I don't know, is that, bravo for me, pat on the back, whatever it is. You make yourself feel good. And that's pretty much that. Stock reversed. It caused the ruckus. It went wild, but I don't care. It did what I wanted to do. I had my plan. My plan was to get out at 151. I should have even just taken all of it off at 151, but I decided, close half, then hold the rest of the half. So I actually sold it for 2 cents more, $2 more. What is it? $2. I had 10 contracts. It was an extra 20 bucks. It's not that big of a deal. We'll just call the average, since I closed 10 at 77 and the other 10 at 78, or I'm sorry, 79, we'll just call it 78. So I closed out 20 of them at 278. So just to do the math, the trade cost $3,480. We got in at 174. Then we sold 20 of them at 278. Let me just do the calculation to make sure I'm right on this one. 278 times 20. That's 5,560. Subtract the cost of the trade, which was 3,480. That's where you get a 2,080 profit. That's the 2,080 profit right there. And that's pretty much that. Like I said, I was willing to hold this to even at the end of the day. I would have even made it a little bit of a swing trade. And that's pretty much that. Ultimately, it doesn't really matter what you do, whether it's a day trade or a swing trade, as long as you have a plan for your trade. You need to have a plan. You need to have a risk management plan. You can't just get into stocks and, oh, well, here we go. Let's just do this. Let's just do that. Let's hope for the best. No, it's, again, I don't know if that's maybe how you trade, then you can do that, but you got to have a plan. And that's pretty much that. It doesn't matter if it's a day trade. It doesn't matter if it's a swing trade, as long as your plan aligns. So, again, back to my basic example. You can make a quick trade of saying, okay, I'm going to buy the stock at 100. If it goes below 99, I'll take a loss of $1. If it goes up to $1.02, I'll take a profit of $2. Risk to reward. You're making $2 for every $1. That can be a trade right there. It can be a day trade. Or maybe you want to make it on a little bit more of a larger term. Maybe you see something else. Maybe you see a bigger move coming. Whatever your reasoning might be, whatever your strategy tells you. Then you can say, oh, well, you know what? I think the stock is going to go up to 105, 110. So I'll get in at 100. I'll take my profit at 110, and I'll take my loss at 98. So now, it's a different ratio. It's a different type of a trade, but it's the same type of strategy. It's all based on your risk management. I don't want to confuse anybody here talking about risk management or anything like that. I'm trying to keep these videos quick and just to the point, just a quick trade recap here. So that's pretty much that. I did the recap. So $2,000, we used less than $3,500. Again, that doesn't mean we're risking $3,500. If the stock went to a certain point, I bought it for 174. If it went to 150, I could have taken a loss. It's not like I put 174 in and, oh my God, I'm stuck until it goes to either 0 or I can take a profit. No, that's not how it works. I know some people think that's how it works. They're usually misguided or misled by people, by other people, but I don't want to get into that. You guys know me. I'll start my rants and all that. I don't want to do that. So anyways, that's pretty much that, guys. We'll wrap it up here. And then since I did mention the chat room, I'll also mention the watch list. I actually, because I used to do alerts where, you know, I'd send out an alert and somebody can get into the alert. But then the thing is that, you know, some people, the problem with alerts is that you never really know what the other person is thinking. You don't know what their risk tolerance is. You don't know where, you know, when they're getting in, when they're getting out, all that kind of stuff. So I changed my alert system. And also the main reason I only had my alerts was just to prove to people, like, look, I know what I'm doing. I can call the trade before it even happens. Now that I've already established that and everybody already knows, all right, this guy kind of knows what he's talking about here, I made it into a watch list system. The watch list is a lot more beneficial for people, and you can actually probably learn more from the watch list rather than the alerts, because the watch list, what it is, it'll be like 5 stocks for a day trade, 5 stocks for a swing trade. So there'll be like 10 on the list. We refresh the swing trade list every week. We refresh the day trading list every day. And it'll basically say, okay, cool, so we're going to get, you know, let's just make something up. We're going to buy stock XYZ if it can hit 100. If it hits 100, then we're going to buy the stock with a risk on 98 and a reward on 100. And, you know, you could trade calls, blah, blah, blah. And you could trade it however you want. You don't have to be an options trader to follow our watch list. You could literally trade the shares. You could buy the stock at $100, you know, the shares, or you could do, you know, the options of it. So that's just like a new idea, new thing that we've introduced. And I usually don't like to try and promote things like that. Like if you go and watch any of my YouTube videos from before, you will never, ever, ever, never will you ever see me ever say, hey, go sign up for my alerts or anything like that. But this, I do want to kind of let you guys know about it because we've been having such good feedback on it. So if you guys do want to sign up for that or just be part of that, I'm going to put a little link in the description. It'll be easier for you guys. Go click that link. You can get more information on how you can get started. But that's pretty much that, guys. Just want to wrap up this video here. So we made $2,000, invested less than $3,500. It was what? Let's see. How long did it take? I know it doesn't really matter. Less than 3 hours. So, hey, that's a good thing right there as well. But yeah, guys, that's pretty much it. So I hope you guys enjoyed this video. I'm not too sure if I'm going to be keeping myself in the screen anymore or not. I'm going to watch the video and see how it goes, see if it got in the way, see if it helped or not. And that's pretty much that. So hopefully you guys enjoyed this video. Hit the thumbs up if you liked it. Subscribe. That way you can be notified whenever I make more videos. I might be slowing down on my video posting a little bit here soon because I have a few new projects that I'm working on coming up here that'll be taking some of my attention. So I might not be able to, you know, pause and make these videos for you guys real briefly, like in the middle of my day, like I have been. That's why I've been trying to, you know, kind of like grind out as much content for you guys over these past few days. If you can kind of see, I've been pretty consistent with the content that I've been putting out. But just a heads up there. So if I do drop off of YouTube for a few days, few weeks, few months, don't panic. You guys know that's normal for me. I usually pick up a new project. I'm always up to something. So either way, you guys can always find me in my chat room or just keep up with me on Instagram and Twitter, who's BijanT, and that's pretty much that. So I hope you guys enjoyed this video, and I will talk to you guys soon.